This is the Scrap Metal and Commodities Recycling Report by Benlee Roll-Off Lugger and Open-Top Trailers and Raleigh Goldsboro Metal Recycling, April 18th, 2016. In this report, last week we saw increases in multiple commodities, negative cash flow is affecting multiple parts of the commodities industry, and oil prices are on the decline again. U.S. steel production rose a bit and remains near almost 6-month highs as tariffs continue to protect U.S. steel mills. The oil rig count remains in a downward slope after falling again and is now nearly 80% below where it was 18 months ago. This is a huge drag on parts of the steel industry. Yesterday there was an unusual meeting of OPEC and non-OPEC countries, including Mexico. They were trying to agree on oil production limits to get prices up further. Iran, a major oil producer, did not attend and is refusing any limits. So Saudi Arabia refused to sign the tentative agreement, and the meeting ended with no agreement. With that, oil prices are on the decline this morning, so oil rigs and the steel they use will not see any major increase in the near future. Ferrous scrap prices continue their rise as export prices remain on the increase, with scrap yards and steel mills having to pay about 20% more for scrap steel now. It has put financial pressure on some operations. Based on that, Schnitzer Steel announced they will move to 45-day payment terms from 30, which is following Nucor's move of a number of months ago. Soon after Schnitzer's announcement, ProTrade followed. This will clearly help large brokers and steel mills and hurt many medium-sized and large scrap operations that will now lose 2 weeks of revenue at a time that they are investing more money to buy scrap steel. Hot-rolled coil steel prices are moving up as well and are at 7-month highs, which is a major positive for steel mill profitability while hurting many of our customers that buy steel. 304 stainless scrap prices actually fell a bit, yet while not pictured here, the low-end stainless steel 400 actually increased quite a bit last week, which has been part of the ferrous price increases. As for copper prices, they increased early in the week and then stabilized at the slightly higher level. Importantly, we see copper inventories are near 7-year lows, which is helping stabilize prices. Inventories are down an enormous 75% from where they were just 3 years ago, a truly major drop. Aluminum had another week of small increases and is actually at a 5-week high. But when looking at the 5-year chart, we see aluminum remaining truly near 7-year lows. About 48 hours ago, the International Monetary Fund that looks at global economics said the downside risks to the global economic outlook have increased since October. And that's raising the possibility of a more generalized slowdown and a sudden pullback of capital flows. They said that a forceful and balanced policy mix was needed to stimulate growth and avoid deflation. China's growth rate, as defined by GDP, was the lowest in the first quarter of the year at 6.7 than at any time since the crash of 2009. The good news is that this was not a surprise. Many believe the Chinese economy is stabilizing at this lower level, which some say is truly about 4% of a growth rate. As a nice positive, China's exports jumped 11.5% from the previous year. And lastly, Alcoa, the 5th largest aluminum producer in the world, released earnings last week that were well ahead of expectations, and their stock price is now up a very impressive almost 50% from late January. With that, we hope all have a safe and profitable week. My name is Greg Brown.